Hello, everyone. Maneko 64 and Clive here, as usual, on a Friday morning. So it's May 31st, 2024. Welcome again, Clive.
Good morning, Mario. It's pouring with rain this morning, which is where I maybe look a little bit wet. I took my son to school this morning, and as soon as we got to school, the heavens opened and a big downpour. So I'm a little bit damp, but I'm surviving.
Oh, that's good. Here it's I think it's supposed to rain later, but it's not very nice either. It still doesn't feel like spring or summer for that matter. But talking about rain, um, well, we're going to talk about actually the day that Clive was robbed by the ECB and the Greek government. Yes. Uh, and yeah, that was back around 2010, 11, Clive. Was that when it?
Just after around 2012, actually, but
2012, yeah.
thereabouts, yeah.
Yeah, and what we're trying to tell people here or warn people about is that government bonds, they've become, some people think that they've become more attractive because they pay a higher yield or a higher coupon. I mean, 3 years ago, you wouldn't get much for putting money for 10 years with the government. You'd get uh, sometimes less than 1% or even negative, and now you're getting 4 or 5, and you think, oh, that's a great deal. Let's put our savings there. But yeah, don't be fooled. You can't really trust governments and the central banks because they work together. So I'll let Clive tell you about his experience with the ECB and the Greek government.
Well, let's go back to 2009, shortly after the global financial crisis. And Greece actually had quite a high level of debt at that time. And they saw fit so they could keep tapping the international market, the bond market, to lie about their statistics. So they were lying to the international community and to the ECB and to the European Commission about how much debt they had, about how much they were overspending their money. But then there was a change of government in Greece, and the truth came out. There was a leak about the truth, and the statistics had to be revised. And that meant that everybody lost confidence in Greek bonds, and the price started to collapse. And there was a real fear that Greece was going to default. We're talking about 2009 or thereabouts, going on to 2010. So obviously, if Greece had defaulted, that could have meant the end of the Eurozone and maybe the end of the EU because the EU was going to break up. So the Troika, which is the European Central Bank, the European Commission, and who's the third one? The International IMF, the International Monetary Fund, they stepped in and lent Greece 110 billion dollars equivalent, or euros, actually, 110 billion euros. That's a lot of money for a very small country. And that came with lots of conditions, mainly that they had to have an austerity program and cut their spending significantly, raise taxes and those sorts of things. Unfortunately for Greece, the international community strongly suspected they weren't cutting spending. They were actually spending this money on their salaries and looking after themselves, and were carrying on as they had always carried on, overspending. So once again, Greek bonds started to plunge in price, and everybody kind of expected that at some point Greece was going to potentially default, although that was not really seen as the number one expectation. It was rather seen that there would be a negotiation with the creditors and we'd get what's called a haircut. So Greek bonds were a haircut. I'll explain. A haircut is when instead of getting 100% of your principal, they say, okay, you've got a bond which is 100% principal, but now it's only worth 60 or 50% of principal. Now, haircuts are something which are often done with countries when they can't pay their debts. So creditors are quite happy to get part of their money back as opposed to nothing at all, and obviously a very long wait in bankruptcy. So that was the expected outcome, that there would be some sort of haircut. And I, in my wisdom, perhaps it wasn't so wise with hindsight, thought that I kind of liked the price. Greek bonds were trading at half price, and I thought I'd buy myself some Greek bonds, as did many people, including your pension fund and many of the banks around the world. Seemed like a good idea. But of course, I went in with eyes open. I know what a bankruptcy is. And I know if you have a bankruptcy, you don't get your money back, or not so much of it, but you do get a claim on their ships and other assets around the world. And I also know what a haircut is, which was the expected thing. And I was expecting at some point to get a haircut, maybe at 50, 60, 40, even 40%. And I'll take my chances with that. I never anticipated what actually happened. So the European Commission, the European Central Bank, and the IMF did not want Greece to default because that would really be the end of Europe, the end of the euro. So they were in negotiations. The largest holder of Greek bonds was the European Central Bank. And the reason they were the largest holder of Greek bonds was they had been busy buying these bonds from the banks at 50, 60, 70% of face value, because as these Greek bonds were going down in price, it was giving the banks in Europe a problem because it was eroding their capital. Obviously, if you have an asset which is worth less than you paid for it, that's a loss, and that's eroding your capital. So to avoid a second global financial crisis, it was important to ensure that the banks had someone they could get rid of their Greek bonds to, and the ECB was the natural buyer of those, albeit they were only paying half price for those bonds. So the ECB was buying up those bonds, and ECB became a very large holder of Greek bonds. And as the biggest holder of Greek bonds, they were leading the negotiations with Greece for a haircut. Now, the rule of law and Greek law at the time was all bondholders are treated equally. It's pari passu. And I would have expected that when a haircut is eventually agreed, we will all get treated equally. Unfortunately, the ECB and the European Commission persuaded or accepted that Greece changed the law so that a majority holder of Greek bonds could decide the fate of Greek bonds for everybody else. That's called a collective action clause. In other words, removing the one man, one vote, or the right to equal treatment from everybody, and putting it in the hands of the largest holder of Greek bonds, i.e. the European Central Bank. So little did I expect that they would vote in this way, but in fact they decided that they will get paid in full and everybody else could go whistle. In fact, we did get something, but it was like split into 30 bonds of almost negligible value with long maturities and almost no interest at all, worth a tiny fraction of what the ECB got. So the ECB had basically been buying these bonds at 50 or 60%, managed to bail themselves out by getting the 100% back. Obviously, they promised Greece they'd lend them some more money to pay them back in the first place. The important feature of this, it saved the ECB itself, who only has capital of, at the time, less than $11 billion. So it was saving the ECB from failure as well, or at least from insolvency. But what it did, it put the small investor and pension funds who own these bonds into a much weaker position, a significant loss of value on our investments in an unfair treatment where some investors are treated more favorably than others. The some investors, of course, was the European Central Bank. Now, this unequal treatment of creditors was very controversial at the time. Of course, I was quite upset about it, but there were some creditors who had enough Greek bonds to take the European Court Commission, the ECB, and the Hellenic Republic, that's Greece, that they could take them to the European Court of Justice. And there were quite a few cases where people sued the European Commission or the ECB or Greece, saying this is unfair treatment. Anyway, the rulings all came down in favor of the EU, in favor of the ECB. And what they basically said was it is completely illegal for Greece to change the law on investors. They said that the investors who were obviously, in their eyes, wicked hedge funds, could afford it. They found that it was not an intolerable, well, they're talking about the hedge funds here, not an intolerable impairment of the applicant's right to property, and that these actions to deprive us of value were in line with the public interest objective of, I'm reading from the court decision, in line with the public interest objective of ensuring the stability of the Eurozone banking system as a whole, and not disproportionate and not an intolerable infringement of our rights. So, whilst accepting that the law had been broken, they by the EU in taking my money and others' money, they said that I'll just read the relevant clause.
They did it for your own good, right?
That yes, it was for the good. I mean, in a way, it is a way, because obviously we would have had a little bit of chaos in Europe had they not done this. So, but the I'm just looking for the relevant bit about breaking, where the court accepted the law had been broken.
Just want to tell the viewers.
Oh yes, here we are.
Just wanted to tell the viewers, Clive, I've got these charts here. This is what happens to the government bonds when they have a crisis like that. Yields rise massively. You can see the Greek yields went up to almost 30%. That means the bond prices collapse. And this is what happens. And notice that it was around 2011, 2012, and that was at the same time that gold was actually making an all-time high at $1,900. It made an all-time high in euros as well, because the euro was under pressure. And Clive, if I could just add, I remember this summer of 2011 really well. I was going to my jeweler in the city, John Haynes, and he dealt in bullion. He had very good prices for sovereigns. And he said, I heard from one of my contacts that the Germans are printing Deutschmarks just in case the euro collapses. So the German government, or the Bundesbank, they were getting ready to bring the Deutschmark back. That's how serious this was.
Well, I think at the time the Italians were printing. I forget what the word was, in Bueno or something, but anyway, it was tax receipt certificates, so they could pay their civil servants with these tax certificates, which weren't money, but apparently the civil servants would then be able to pay other people with these tax certificates, could use them to pay their taxes. Of course, the EU, the European Central Bank, clamped down on that and said it's illegal. You can't print another currency, even if you call it tax certificates. But I'll just finish off very quickly. I'll tell you why I'm telling you this. This was the final decision of the European Court of Justice about the EU breaking the law. They said none of the arguments put forward by the applicants, that's people like me, I wasn't suing, but others were, none of the arguments put forward by the applicants demonstrates that the ECB committed a sufficiently serious breach of rules of law. Accordingly, the applicant's claim for compensation must be rejected for that reason alone. So the breaking of the law was not sufficiently serious to compensate the small guy like me, and I deserved, well, we all deserved it because it saved the euro. That was far more important. And I mean, I do agree with their decision because it was right to save the euro. That was the only way to save the euro. Was not to allow people like me to get equal treatment, because if we got equal treatment, the ECB would have got paid less, and if the ECB had got paid less, they would have been insolvent. And that would have been the end of the euro, which would have been a chaotic financial system. So it's not that I'm disagreeing with it, but why am I telling you this? My message is, if you're owning government bonds, they will change the rules on you if there's a problem, and you might not get back what you expected to get back. You might not be treated equally with the preferred creditors, and the preferred creditors in this particular case I'm talking about was the central bank in Europe. But of course, it could happen to any country where the central bank, who will be the major holder of the government bonds, will get preferential treatment, and you, as an investor in government bonds, might not, as exactly happened to be with the Greek bonds.
I don't agree that they did the right thing. I know you agree to save the euro, but if the euro wasn't worth saving, I don't think and saving. Plus the fact that Greece and I think Italy as well, they use derivatives to lie about how much debt they have, and Goldman Sachs helped all these countries. So the euro is really based on a lie. But they kept it going. And is it any surprise that Mario Draghi, who worked for Goldman Sachs, uh, helping these countries like fudge their accounts, became head of the ECB and then became the prime minister of Italy. So it goes to show that if you're not in the club and you get screwed, and if you're in the club and you do break the law, like the European Court of Justice said you do, you get rewarded. And Yes. The other thing, Clive, that was happening back then, a lot of people were buying German government bonds because their thinking was if the euro breaks up, the Deutschmark will come back. And yeah, you want to hold government, even though the government bond for Germany was denominated in euros, it would have become denominated in Deutschmarks. Do you remember that too?
Absolutely. I mean, this was uh, the the dilemma for investors. Do I buy the high interest bonds from what they called it the pigs,
Yeah.
Portugal, Italy, Greece, and Spain? Of
Oh,
course, Ireland.
Ireland.
Ireland was in there
Yeah. Yeah.
as in there as well, wasn't it? So it's PIIGS. Um, and you could get very high interest rates on those bonds, or do you buy the German bonds where the interest rate was much lower, and therefore because Germany was deemed to be solvent?
Yeah. As I said, don't be fooled by the higher yields we have today. Governments can do whatever they want with their central banks to save their skin. And I'm going to cover here something, Clive, that I've covered before, but I haven't heard anyone really talk too much about this here in the UK. I'm sure a lot of people remember back in September of 22, we had like a guilt crisis. They say that it was Liz Truss and Kwasi Kwarteng with their mini budget who triggered it. We saw guilt prices drop massively, yields spike. We saw the defined benefit pension schemes almost collapse, and the Bank of England had to intervene. But I was telling people about this because this crisis culminated, of course, at the end of September, beginning of October. But and this has got to do with also the government screwing investors. So pension schemes lose inflation ruling to the great relief of the Treasury, meaning the UK Treasury. So what happened here in 2022 was that the Treasury changed the way these linkers, and they are inflation-linked gilts. And the UK has been like a pioneer in issuing these inflation-linked bonds. They started in the 80s, and they linked it to the retail price index, Clive. And the retail price index has always been higher than the CPI. So who was the chancellor back then? I think it was Rishi Sunak, probably. Yeah, he was the chancellor. They're trying to change the link to inflation to CPI. And these pension funds here, very big companies, as you see here, BT, M&S, Ford, uh, um, picking up the tab for the downgrading value of their assets. FT reports the scale of the tab as between 90 and 100 billion pounds over time. So there's a lot of opposition, but unfortunately, the High Court decided in favor of the government, and that was right in the beginning of September. I see very few people talking about this, and the inflation linked or linkers, they make up about 20% of all the debt issued by the UK government or Treasury. So it's not negligible. But it says here RPI, which dates back to the 1940s and is regarded by official statisticians as inaccurate and obsolete, remains the benchmark for inflation-linked British government bonds that are commonly held by pension funds. Uh, and the other,
Well, I would say, Mary, I'm very surprised by the High Court's decision. And I'm pretty sure that back in the early 2000s, or maybe it was even late 90s, but they tried the same thing. And it was, I might have got this wrong, it was ruled to be illegal to change the terms of a contract. Because when you bought those index-linked bonds, they were clearly linked to the retail price index. That was the contract you had, and there was no justification for changing the linkage to a completely different index, which isn't going to give you as much interest. And I'm sure that was a case. I haven't checked it, but I'm sure that was a case back in the early 20 years ago. So it seems it's come up again, and now the High Court has ruled in favor of it. I find that really odd, because that clearly is a breaking of the contractual terms of the bonds.
Yeah, and I have to say that this was only going to take effect from 2030. So right now they're still probably issuing the bonds, these linkers with the RPI link, but I would say the long-term dated ones that are under RPI, it's going to change to CPI in about 6 years. So that's still wrong, and I think that was one of the triggers for the crisis in 2022, in my opinion. And they blamed Truss and Kwarteng, and I'm not trying to let them off, but I think this was very, very significant. And is it any wonder that the defined benefit pension schemes almost collapsed?
One of the triggers for the collapse of gilt prices was derivatives. A lot of the pension funds had effectively written a derivative. In other words, they were liable if things went the wrong way by more than a certain amount. So they'd written some derivatives to boost their pension income, believing that what the option they had written was never going to get called. But of course, once the price of gilts started to fall rapidly, those options were being triggered, causing them giving them a liability where they didn't have the cash. So there was a scramble to unwind the derivatives, but that in itself led to further falls in the gilt prices, which is why the Bank of England had to step in and effectively save the pension funds.
Yeah, and it's always these derivatives. And why? Well, because like with the derivatives that Goldman Sachs helped Greece and Italy, right? And make the debt look lower so that they could qualify to join the euro. They are off balance sheet, so you can't see anything. And when the proverbial hits the fan, people say, well, what's going on? Well, it was the derivatives. But here, just to show you that I wasn't saying this just for the heck of it. You can see that Mario Draghi, it says here, Draghi was also appointed vice chairman and managing director of Goldman Sachs International in 2002. He was also made a member of the firm's management committee, holding all these roles until 2005. He led Goldman Sachs European strategy and its engagement with major corporations and governments. Well, it was the strategy of fudging the books for them, I guess. And then he became governor of the Bank of Italy, head of the ECB, and prime minister. And the same thing goes for this guy here, Luka Papadimos. He became prime minister of Greece, but he was also governor of the Bank of Greece up until 2002, ECB vice president. When all this was happening, and I'm sure he was aware of all these shenanigans. And what I'm trying to say here is it seems like in the public world, the more nefarious things you do, the more important you become. So I'll stop at that. And Clive, what's your view?
Well, if you've got kids, send them to study politics. It sounds like a good business to be in.
Yeah, and banking, I guess, too.
True, true.
Mix.
Uh,
Clive, talking about the rule of law and how the ECB and the Greek government stole your money, really, could you just go over what's going on in the US in terms of the, well, rule of law and former President Donald Trump and what you think could happen?
well, he's just been found guilty of quite a few crimes under their book, but basically it's bookkeeping offences. Now he's not got a criminal record. He's a first-time offender. It's a non-violent crime, and sentencing isn't due for more than a month. In theory, he could go to jail for 4 years, but I suppose with all his lack of criminal record, I don't think they're going to put him in jail. I think that he'll probably get a probational sentence, probation for a year or two. But let's just look at what might happen if a future president of America is sitting in jail. How could he run the country? I think that's an interesting thing to think about. Of course, if he's in jail, he won't be counted as one of the unemployed because America doesn't count incarcerated people as unemployed at the moment. But yeah, fulfilling his presidential obligations in jail would be quite difficult. I don't really think any of this is going to happen. I think Mr. Trump will appeal the verdict, and I guess it'll be a long time before it gets retried. If that appeal is allowed, of course, we don't know that's going to be allowed. But it's a very interesting situation because what's he done? He's covered up, obviously illegally. Now the jury's found he's covered up the fact that he paid off somebody so his wife wouldn't find out that perhaps he'd slept with a lady or not, as he denies it, of course. So, yeah, I don't know what to say. It's I'm not for or against Trump. I just know that the outcome is that he's been found guilty, and this is obviously a bit of a political crisis in America, isn't it? What do
Yeah,
you think, Mario?
I think it's yeah, like I said, the rule of law is no there anymore. I think it's a wholly political trial, like a kangaroo court, and it shows how divided America is because I read that a lot of his supporters and not even supporters are like breaking the websites. The donation websites are going viral with donations for him, so he's getting even more support. And I saw that Robert F. Kennedy Jr. said that. Yeah, it's totally political, even though he criticizes Trump for a lot of the things he did when he was president. He said this is the Democrats trying to stop him with, with this kind of, yeah, kangaroo court. And I
Well,
think he mentioned as well, sorry, Clive, that when his statement, he said that the what was it? He said it was a Soros-backed guy, a legal guy. I forgot the term who started all this thing. And this case was brought a year or two ago, and it was dropped because there was nothing really. They and people argue, the people who are pro-Trump, that and I haven't really looked too much into it, that there is no real accusation, and that the judge didn't really make it clear to the jury, just told them to find them guilty, which seems really not justice.
Well, here's the funny bit about all of this. As you know, a president of the United States can pardon anybody he likes. I mean, you remember the Mark Rich case, for example, after he donated billions to the government, obviously the guy got a pardon. So if Trump does become the next president, will he be able to pardon himself? I guess not. But if Mr. Biden has any brains in his head, and that's to be questioned, I think Mr. Biden, President Biden, should pardon Trump because let's face it, who's next in line for accusations when he ceases to be president? So let's assume the way the way it should be played is President Biden probably should pardon Trump. Trump will then become president, and then Trump can pardon Biden if, in fact, he's ever charged with any crimes.
Yeah, that's my conclusion, is that they've opened a can of worms, because if the Republicans win in November, the presidency, the Congress, and the House and the Senate, it's going to come back to haunt them, I think, because they're going to go against them. And it just goes to show that, unfortunately, America is becoming more and more like a, a banana republic. And do you really want to own bonds from a country that doesn't even uh, can't really respect the rule of law? I don't think I'd be very comfortable holding treasuries or Federal Reserve notes.
And not only this, we've got some of the highest people in the land expressing concern about the government's inability to balance its budget and to control its level of debt. Obviously, one of those people is the chairman of the Federal Reserve. He basically said the level of debt is unsustainable. He said it's very concerning. I think we've also had head of JP Morgan, what his name now?
Jamie Dimon.
Jamie Dimon, yes. He basically has said this is unsustainable. It's a big problem. So we've got some very important people who know what they're talking about, saying it's not just the politics of the situation, it's the actuality of the situation. The level of debt is completely uncontrollable. There's nothing being done to address sound finances in the United States at the moment.
Do we want to talk a little bit about silver now, Clive?
Yeah, so last Sunday, once a month we have a flea market in a village nearby us. It's a small town, actually. It's a very large village. It's called Neon, and it probably gets about 10,000 visitors to the flea market. There's many hundreds and hundreds of stands, people selling their second-hand stuff, but also a large number of professional dealers selling trinkets or jewelry or pictures or antiques and that sort of thing. And I haven't been there for a long time, but I went down to have a walk around. I was kind of got my eye open to see if I could find any silver coins, because I'm a collector of silver coins. And this was 3 o'clock in the afternoon. Almost immediately, my eyes fell on a stall with a glass case, and they had lots of silver chains and rings and things and pendants in the case. But there were 2 coins like this. It's written one, I don't know if you can see it, it's written 1 ounce in German, 999 silver. They are Swiss coins. They're part of a collection of Swiss castles. You can't see the focus there, but 999 silver. And I thought, and 1 ounce silver, I know what that's worth. It's worth $30 an ounce, or 28 Swiss francs. I'll just see how much they are. So I said to the lady, "What do you want for the silver coins?" And she said, "They're silver." I said, "Yep, I know that." And she said, "How about 10 francs?" I said, 10 francs each? Yep. She said, "I'll take them both." So I guess and I'm going to go on to another point in a second. I guess 10,000 people had walked past that glass case, and not one had seen fit to either ask what the price of the coins were or even knew what the price of silver is. We are very, very early as silver collectors. The fact that and she was, by the way, she was a professional dealer. I said, "Are you a one-off?" And she said, "No, I'm here every month. I come here." She's an amateur, but she's there every month. But selling silver coins and having no idea what they're worth just shows how early we are. But this wasn't the only incident in the same market. A little bit later, I came across another stall selling antiques, and one of the things he had was a coin book. That's a coin book where you put the coins in the slots. They had Swiss coins going back 150 years, 1 franc, 2 franc, 50 cents, and all that in the slots. And sometimes there were 4 or 5 in the slot because they got more than one in the same year. But they were all prior to 1967, which is the year up until that year. Swiss coins were 83.5% silver. And I said, "How much do you want for these silver coins?" He said, "Oh, 3 times face value." So I said, "This 2 franc coin, for example, how much is that?" He said, 6 francs. Now, I was pretty sure that these coins are worth about 7 francs 30 for the silver content alone, but I thought I must have made a mistake. He's asking me less than the melt value. So I took my phone out and started doing the calculations to make sure I got it right. And yeah, I got it right. He was asking significantly below the melt value. So I went back and I said, "I'll buy them all." And then he said, "Oh, I better go and check something." He backed off. He backed off very rapidly. And he said, "No, I don't want to sell any," because he realized that because I've got my calculator, I was doing some maths. I must know what I'm doing. But he didn't know. He had no idea what they're worth. So for those of your listeners who like the idea of collecting coins, do have a look around your flea markets. If you don't know what the coin is really worth, take a flyer on it. You might get something. You might get something good. But if you've got an idea what silver is worth, and you know the price of silver, and you have a guess what the weight of the coin is, you can probably get some very good bargains. And I just after we finish this show, I'm actually going off to my nearest pawn shop here in locally near Geneva. He's sent me a picture of a lovely collection of 27 silver coins that have just come in. They're in a case, a glass case. I think it's a glass case. It looks like it is on the photo. Nicely presented. They're about the price he wants is about 50, I think it's 15 Swiss francs per coin. I've done the maths. That's slightly above the silver price for the coins. But again, he's making a profit on it because he's selling above the silver price. But I'm getting a lovely collection of coins in a box, and I did check on the internet to see what other people are selling these for. They're selling them for at least double the price. So what I'm saying to people, if you're choosing silver or gold, the more you walk around, the more you go into antique shops, the more you go into flea markets, the more you look on eBay or Ricardo or any other website which is selling things, the more likely it is you'll find some bargains that you might like. And I started collecting coins when it was actually about the time I started listening to you, Mario, a couple of years ago. Up until then, I'd been collecting gold for 50 years, but I started listening to you, and I thought, well, maybe I should get the odd silver coin. I went into a Swiss, a large chain, and bought myself a couple of nice silver coins. And then I started looking on the auction sites, and I found the more I looked, the more I found. Back then, the silver price was sort of $17, $18, $20, $21, that sort of range. And of course, we're now nearer $32, $31, I suppose. So everything I bought back then is worth more than I paid for it. But little by little, as you start to do this, you start to become interested in the types of coins you own. And I've got some very nice collections now of Olympics, Swiss castles, Swiss railway stations, presidents, famous inventors, all kinds of things, commemorative coins, and of course the Australian lunar collection, which are the 12 animals of the lunar calendar, where they bring out one new coin each year. Quite difficult to get your hands on the entire 12, but I've got my hands on all 12 now, so I'm very happy with that.
Yeah, and Clive was talking about the incident he had at the flea market where he took out his calculator, and basically he was going to buy what you could call Swiss junk silver, which is like the equivalent of pre-65 in the US. And I'm showing this page here. It's called the website is silveragecoins.com. And the reason I'm showing this is because you can go here and you can go through all different countries, as you can see here, and look at their coins, their silver coins, and it gives you exactly what they the composition, how much silver they have, and you can see here that the early franc coins from I guess 1850 to 1857, they were 90%. And then they lowered it to 80, and then they went back, then they went to 83.5. And that was until 1967. But after 1967, as you can see, they're all copper nickel. So yeah, if you're in Switzerland, you find a coin that's from 1875 to 1867, you can do the calculation really easily and see if you're paying a bargain or if you're being like overcharged. And you can go to almost any country here. It's a really good website. And sometimes they have the collector's coins here. So it's silveragecoins.com. Clive, as we're talking about silver, just wanted to see what you think here, because we'd heard, I think a month or two ago, that India was already importing a lot of silver, but now it looks like they're continuing to do it. So it says India imports more silver in 4 months of 2024 than in all of 2023. So they're continuing to load up on silver, which is really interesting. It's not just the Chinese.
Well, the demand for silver from all directions is rising very rapidly. if you go to the Silver Institute's website, you can see that they are forecasting a huge rise in certain areas of the silver industry, like such as the electronics and photovoltaic industry. I'll mention one part of the electronics industry, that's artificial intelligence. They say that the artificial intelligence machines are now consuming using more electricity than Bitcoin mining, which has been going for 15 years. So in just 2 years, we've gone from zero artificial intelligence usage almost to massive consumption. But these machines, they need two things. They need silver for the components, because it's got to be, these are very, very precise. And they need copper for the cooling mechanisms, for the fans and so forth, copper wiring. So in a way, the electrification of the world is consuming more and more silver and more copper. Now, I'm not a collector of copper. I mean, that would be very bulky to carry, but so I haven't got any interest. If you want to get involved in copper, the way to do that is by one of the big copper miners, such as VALE or BHP or Anglo American, or there's Southern Copper. There's one other, which Rio Tinto. But realistically,
Freeport McMoran as well.
Yeah. There's quite a few. There's a few out there. Just Google it, and you'll find some names of copper miners. You don't want to collect copper bars; they're really, really bulky for the value you'll get out of it. But silver, of course, it's quite easy. For $30, you get a little silver coin. Quite easy to collect that. Whereas with $30 of copper, you get a great big bar like that, difficult to store.
I have a 1 kilo copper bar on my shelf here, and I paid 35 pounds for it. So in gold, it would be like, I don't know now, it would be like
half a gram.
60,000 pounds.
Oh, yeah.
Kilo bar. But the other thing, there's another analyst. I saw his name is Chin Pen. He's got a newsletter, Chinese guy living in the US. And he says that the Silver Institute is actually underestimating how much silver people are using. And he's looking at Chinese data, and it's going up quite a lot, the demand for silver. He saw demand for copper in China really increasing in March. And no one had looked at the Chinese data, so he went and bought copper under $4, high grade copper, and it went to like 5 or more. So he sees the same thing happening for silver, and he also said that even though silver use for solar panels is decreasing because of substitution, he says that solar panels are becoming cheaper and cheaper to build and produce. So there's going to be a lot of demand for not solar panels, sorry, solar panels are becoming, so there's going to be a lot of demand for solar panels because it's really easier to put a solar panel than create let's say a nuclear power plant. And he thinks that the demand for silver is going to increase by like 50 or 60%, while the Silver Institute only sees 20%. So yeah, very interesting.
Well, we in Switzerland are, as homeowners, are coming under pressure from the government to install solar panels or other economic forms of heating, such as geothermal or something which is known as a heat pump. So the pressure's on, and I haven't gone into all the details because I'm not very much in favor of changing anything, but many of my neighbors are now putting in solar panels due to that pressure.
So here's how significant this is. It says India imported 4,173 metric tons of silver from January to April, up from 455 tons in the same time period last year.
Wow,
So
big!
it's
That's
like
10
almost
times.
10
Nearly.
times. Yeah, this is and the thing is, we in the West don't look too much at India or China because I don't know why we do that. And I think a lot of people are going to miss the boat on silver. So
Well, the other use of silver, one of the big uses these days, is military use. They say this is going into all these bombs and missiles and God knows what else they're shooting at each other. Um, I don't know that for sure, but just perhaps talking about, as we touched on China, it's kind of gone under the radar screen a little bit. But last week, China was carrying out military exercises. They called it a warning around Taiwan. They surrounded Taiwan with ships and fighter jets. They carried out several days of drills and mock attacks on Taiwan. They now say the exercise is finished, but Taiwan is saying Chinese warplanes and warships continue to conduct joint combat readiness patrols. So Taiwan is still not happy that it's completely over. And last week, China banned Taiwan tour groups from visiting China from the 1st of June. They also, so they're obviously upping their ante with Taiwan, and they also cancelled the preferential trading with Taiwan, the tariffs. In other words, they removed all the tariff reliefs that Taiwan has got with China. So the anti-Taiwan feeling in China is certainly growing, and yeah, it looks like tensions are increasing in that region.
I agree. So, Clive, thank you for coming on again. I really enjoy speaking with you on Fridays. Any final words for the viewers as we go into the weekend?
Well, yesterday I was out in the garden. This is funny, nothing to do with you. I was in the garden and I found my potatoes are ready. It's early days for potatoes, but anyway, it's been nice weather. But for your viewers, I just hope that everybody can prepare themselves and don't buy. My message is don't buy government bonds. I think that's a fool's game. Get yourself into other things.
Yeah, and I would say banknotes or cash, they are kind of a government bond. They're like yeah, liquid government bonds. So that's why they're going to lose value as well. And you saw by that chart earlier how the yields can spike very quickly. So yeah,
Well, when I was young, in banking, one of the biggest jokes we had before we had zero interest rates was we used to joke about the government issuing, and we'd play this joke on the young people who didn't understand it. We'd say, "What do you think about buying a zero coupon perpetual?"
yeah, yeah,
And
that's cash, isn't
that's basically cash. And of course, a lot of young people thought that they'd heard the word perpetuals, they heard the word zero coupon, and they kind of thought, "Oh, this might be a good idea." But it was
Yeah.
just a bit of a joke we played on the young
Yeah.
guys.
Well, I think the UK government, they were the first ones to issue perpetuals in the 19th century. And even they defaulted kind of because they lowered the coupon at one point. And I think one of your family members was
Yep.
impacted by that. But anyway,
My grandfather got caught out when they lowered the coupon on war bonds and turned them into consols.
yeah, there you go. They pander to your patriotism when they need your money, and then they go and rob you, basically. So keep that in mind, guys, and have a great weekend and take care. Bye.